everyone, welcome to this week's video. Hope you're well this week. Today we're talking about some big changes that have occurred to credit cards and loans in 2019 in Australia. So today is Did You Know? For those of you that haven't met me, my name is Angela. I started the Money Messenger project as a way of imparting some of my knowledge with regards to money matters. I've been working in financial planning for the last 20 years. I help financial planners to prepare the plans for their clients, which detail strategies about how to repay debt, grow their wealth, and get ready for retirement, things like that. So the Money Messenger project is a way of sharing with you some of the information and lessons and knowledge that I've learned over my career in financial planning spanning 2 decades. I'm also an investor myself. I started with nothing and I've gone on to accrue a multi-property portfolio. And so whatever I tell you, whatever I teach to you, I practice what I preach. So today is a Did You Know? Did you know about some important changes to credit cards and loans that have occurred in Australia for this year? For those that are watching live, please click in the box. Tell me where you're watching, say hi, send a wave. If you've got questions with regards to what we're talking about today, please feel free to pop those in the box and I'll do my best to answer them live while we're on the air together. So let's get started. Did you know? Did you know about the big changes that are occurring to credit cards and loans in 2019? Let's talk first about credit cards. In Australia and around the world, but let's talk Australia, there's an epidemic of credit. People are credit hungry. What do I mean by that? I mean the use of credit cards, the use of personal loans, the use of after store purchase, pay now, pay now, pay later, receive now type schemes, store cards, furniture packages, take the furniture home now, pay it off later. All of that is credit. Whenever you're spending money that's not yours, you're spending credit. You're spending someone else's money. So for other people to make money for lending you the money, they charge interest usually. So personal debt is what we call bad debt. It's credit cards, personal loans, car loans, even sometimes home loans, because those things that you're buying with credit don't make you money. They actually cost money because they generally go down in value. And so the credit that you're paying for, the interest expenses, are useless. It's for nothing. So in Australia, we're seeing people's credit hunger is growing. We're seeing that there's more and more people having personal debt, whether it's because they like new flashy things that they have to have, whether it's for instant gratification, the feeling of having something now rather than saving up for it. Sometimes there's people that are struggling to make ends meet, and so they're falling onto credit to help them make ends meet. So there's different reasons why people are going for credit. But let's talk about those now that are using credit as a way of getting things that they want now instead of paying for them by saving up for them. So I'm talking all to you out there that like your credit cards. Those of you that like your store purchases paid on credit. Those of you with personal loans, car loans. Credit card is bad. Credit card debt is bad. You need to get rid of it. So because the government can see that there's a growing epidemic of hunger for credit in Australia particularly, but also we're seeing that all around the Western world, the government has made some changes to the way that banks are able to offer credit cards and card issuers. There's some changes that came into effect as of the 1st of January, which are very, very important and you need to know them. These changes have come about because the government sees the growing problem of credit card debt in this country and they're trying to do something about it. So take note, when the government brings in new laws that restrict banks and other card issuers from doing certain practices, you should take note, because that's when things are getting out of control and the government is needing to step in, basically. So those changes that came into effect from the 1st of January with regards to credit cards are, whenever you're applying for new credit cards, number one, it will be harder from now on for you to access credit cards. Previous to this year, when you went for a credit card or a credit card loan limit increase, you were assessed based on your income and expenses and whatnot to see if you could afford it. The way that that assessment is occurring has changed now. Banks or credit card issuers, I'm just going to use the term banks just for now, but anyone that offers you a card, a credit card, When you apply for new credit cards, they have to assess your income and your expenses to make sure that you can repay the full credit card limit within 3 years. Previous to that, they only had to make sure you could pay 3% a year, but that ain't going to repay the debt in time. So the government stepped in and said, no, you need to make sure that people can repay the whole credit card limit within 3 years. So what does that mean? Well, that might mean that the limits you're used to in the past, or the easy way of able to accessing credit card in the past, will change and maybe lower. That means if you were considering a balance transfer card, say you want to transfer $5,000 worth of credit card debt from different credit cards into one credit card, that may not be possible anymore. Or you may be only eligible for a smaller amount, say $4,000. In that case, you'll end up having a $4,000 balance transfer card, but you still might have $1,000 stuck on the old card with your higher interest rate. So certain strategies when it comes to balance transfer card may or may not apply to you anymore. So for those of you that like to rely on 1 or 2 credit cards or more in the future, it may become harder for you to get a credit card. That also is for credit card limit increases as well. So before, when you could easily just apply for an increase or an extension to your credit card limit, that's going to become harder now. And that's all just to try and stop people from taking out so much personal debt. Number 2, credit card issuers can no longer invite you to increase your credit card limit. Before, you would have got letters in the post or online saying, you know, you're such a good client, you're such a good credit card repayer, would you like to extend your credit card limit? That's no longer allowed. Actually, that rule has been enforced even since last year, but that one's no longer around as well. Number 3, credit card issuers must allow you to cancel your credit card or reduce your limit online, and they cannot take reasonable steps to try and talk you out of that anymore. The big one, number 4, interest. Previous to this year, interest could be backdated. A lot of people don't know this, but when you have a credit card and it might have a 55-day interest-free period, for example, that means you could make purchases with up to 55 days before you need to repay it without paying interest costs. That's no longer that's changed, because in the past, if you didn't repay your whole entire credit card balance owing, the bank card issuer would backdate your interest to the beginning of that interest-free period. That was a killer for interest, because it immediately meant that you were paying all this interest and that you were going to be shooting yourself in the foot, because the longer you held that interest, the more interest you were going to pay with already an amount tapped onto it. So that's changed from this year. Credit interest can no longer be backdated for credit card purchases, for example, after the 55-day interest-free period. Now, that may not apply to you with existing credit card debt. If you're already paying credit interest for credit card debt, then you just need to pay that off and get rid of it quick smart. I'm talking about new credit cards that you take out or increases to credit card limits. Those of you that don't have credit card debt owing on a particular card, when you have debt on that card from now on, these changes will come into force. So I'm going to put a link to this sort of stuff because it's a little bit detailed, but so that you can read about it more. But these are just things that you need to be aware of. These have been brought around, like I said, because the government sees there's a growing hunger for debt in this country, and it's killing us. It's really just not on, because people are struggling more and more. And one of the big reasons is because of the credit card debt that they seem to be accruing. And from an early age, I tell you what, in the last few months, I've done financial plans for financial planners, and I've been seeing 21-year-olds, 22-year-olds with 20,000, 30,000 credit card debt. I saw a couple the other day, they're 28, I think they were, both earning fairly good incomes. They had $52,000 worth of credit card, personal loan, a little bit of HEX debt as well in there. But let's forget the school fees from now on. I'm talking about your credit cards and your personal loans. They had $52,000 worth of credit card debt essentially between them. They wondered why they weren't able to save for a home loan. I'm going to tell you, it ain't because the prices of properties are going up. That's for sure. It's got nothing to do with that. So credit card changes from the 1st of January. Number 1, applying for new credit or credit increases will be harder. You may not be eligible for new cards in the future, or you may be eligible for lower balances. That can affect some balance transfer card strategies. Number 2, card issuers cannot talk you out of a request to cancel your card or to reduce the limit. They must allow you to do that online as well. Number 3, card issuers can no longer backdate interest. So that means if you have a 55-day interest-free period, that goes, you've got credit card debt now, interest can only start from that period onwards. That's a huge change. And the last change was also they're no longer to invite you for credit card limit increases, but that one actually kicked in last year. They haven't been allowed to do that since then. So big changes for credit cards. Doesn't make them any better. You need to get rid of them as soon as you can, because they're going to kill you financially and it's doing no one a favor. You need to get rid of it. The only people that win when it comes to credit are the credit providers. Now that goes to whether it's a credit card, personal loan, car loan, afterpay type thing, anything. The only people that win are the people that issue these products to the marketplace, to customers like you, for example, that might have credit card debt. Let's talk about loans. There's also been some changes to the way that loan applications are approved and the credit scoring and credit history that we all have. See, when you go for a loan, you essentially get assessed on your income, your assets, your expenses, whether you can repay the loan. This goes for credit cards, this goes for home loans, investment loans, personal loans, anything. There's a credit scoring system that applies now, and it's a number between 1 and 1,200. And everything you do with regards to repaying debts, paying bills on time, like mobile phone bills, everything goes towards your credit score. So from September last year, there were some changes came into the comprehensive credit scoring system. Now, in the past, when you went for a loan, it may have had details such as the amount you went for, what your repayments were. Now there's some more details. There's more details that are going to be applied to your credit history, your credit score. That could be the date that you took out the loan or the card or whatever it is, the amount you repay, plus also if you've defaulted on any repayments, as in been late on any repayments as well. So before, whilst you would have had a negative mark on your credit score if you defaulted on a loan, didn't repay a loan, now they actually look at your repayments over the last 2 years to see how many times you've actually been late repaying or how many times you didn't make a repayment or whatever. So it's just a more detailed history of your credit and your habits with regards to repaying that. Now, what does that mean? Well, depends how much you use credit. Depends what you're using credit for. If you're going for new credit cards and you don't repay your existing credit cards on time, for example, that will affect your ability to get more credit in the future. If you're wanting to go for a home loan, especially in the future, these are the times that it really matters. When you want to make a financial impact to your financial system, as in for the positive, you want to go for a home loan, an investment loan, things that you've done in the past could shoot yourself in the foot now. So if you've been late paying off a mobile phone bill, if you've been late paying off a credit card, minimum repayment, something like that, those changes that you may have done in the past months or years could affect your ability to get a loan now for a home or an investment property. So the thing you should do, everyone should apply to Equifax for a free copy of your credit history. And you can get a free one usually once a year. I'm going to put a link to this in the box so that everyone can do this after I finish the video. I did mine last year. I actually do mine once a year. I get a report from Equifax just to check on what my credit score is, my credit history, just to make sure nothing funny has popped up. For example, if a bill was paid late, which it rarely is by me, but just in case something fell through the cracks. When I'm going for an investment property loan, for example, I don't want anything to be on my credit history that could negatively affect me. That means I need to check my credit history to make sure there's no mix up with administration or companies haven't made a mistake, because big companies do make mistakes. We all know that. So it's up to me as an individual to check my own credit scoring, my own credit history, to make sure that there's nothing untoward in there that could affect my ability to get new investment debts, for example. So after this video, I implore you, get a copy of your credit history. Make sure there's nothing there that could make your credit score bad, because regardless if you want to get a home loan now or an investment loan now, you will want to one day in the future. So it's a good habit just to once a year check on things, make sure they're going okay. The other thing I implore you to do, if you have credit cards now, use the auto pay feature that your bank will offer you, your card provider will offer you, so that they directly debit at least the minimum repayment or the full repayment or whatever you're doing from your bank account, so that you don't miss the repayment day by even one day. In the past, I used to make a note of, say, when a credit card was due. I always repay my credit cards off 100%, but I used to make a note of when they were due so that I could transfer the money in time. I've switched now to using auto pay because every now and again you might miss a day here or there, or you forget something, or there's a public holiday, or something happens and a credit card might get missed. And I don't want to pay a late bank fee as much as anyone else. But more importantly, I don't want that to appear on my credit score or my credit history either, especially if I'm repaying everything fine and there's just a mix up with, say, processing times or transaction times. So use the auto pay on your credit card facility, on your card issuer's website. You know, something like a direct debit. It means that they'll directly debit the money that you owe from your bank account when it's due. Now, for those of you that are paying minimum repayments, just as a side note, I've done videos in the past about credit card debt and how lethal it can be to your financial world. But if you're making only minimum repayments right now, know that you are paying interest, and that is going to kill you financially. You need to repay the full balance owing on a credit card on the due date. Otherwise, interest will kick in. Interest will no longer be backdated because of these changes that came about, but interest will be applied going forward. So it's really important, guys, just keep in mind these changes to credit cards that are occurring. Think about why they're occurring. If the government is saying there's a problem with credit in this country, then there's got to be, because the government doesn't usually tell the banks to do things unless they need a certain outcome to occur in the economic world. So credit card reforms that I mentioned to you, loan credit scoring changes that I mentioned to you. More information is on your credit score, your credit history now, more than ever. So before, when it was just a loan application might be put onto your credit history, now they're looking at defaults, late repayments, little hiccups along the way that could affect your future ability to get credit. And when you need credit in order to get an investment property, for example, you want to make sure you can get it, and that something as silly as a late repayment on a credit card didn't affect you from a few months before. So, like I said, I'll make notes of all this in the boxes. I implore you guys to check your credit card debt. Get rid of that ASAP. Check your credit score. Make sure there's nothing on there that shouldn't be on there. If there is, you can make inquiries with Equifax and your lenders to get that fixed up, and it's really, really important that you do. So today we talked about big changes to credit cards and loans in 2019. Thank you for watching me today. I hope you enjoyed that video. If anybody's got any questions, please leave a comment on the Money Messenger Facebook page. Happy to answer those questions for you. For those of you that want more of these videos, subscribe each week to the Money Messenger website, www.moneymessenger.com.au. And like I said, you can find us on Facebook as well, where I do live videos every Wednesday about something related to money. And for those of you that have been watching in the past, you'll know that I've written a book. It's out, it's ready. I'm holding a hard copy here, but for now I'm going to be concentrating on just the ebook because I want this to be more affordable for everyone, and I want it to be able to reach overseas easier for everyone, so that everyone around the world has a chance to read this, because this book could change your money world. It will teach you how to use the money you earn now, but in a better way, so that you can get more out of life. So the book is ready for purchase on the Money Messenger website, www.moneymessenger.com.au/book. You'll find it on there, instant download. Guys, it's $17.95 for the ebook. That's less than the cost of 4 cappuccinos. So I implore you, please have a read, pass it on to your friends. I may release the hard copy in the future, but for now we're just focusing on the ebook. So read it, tell me what you thought about it, tell me what you learned from it. I'm signing out for this week. Thanks everyone for watching live, and I'll see you all next week for future videos. Bye.